Mhm. Mhm. All right, so we're starting with dealing with risk and uncertainty, right? That's the area we're starting with today. So you all know that risk is something that we know the possibilities and probabilities of, so we're taking risk. Uncertainty is when you really don't have any idea as to what may happen, right? There are three types of decision makers. Basically, there are risk seekers who go for it and they take the risk. So they are max, right? Risk neutral, meaning these guys not take too much risk, nor do they play too very safe. They are risk neutral. They go with the average, right? Risk averse are like guys who don't want to regret, nor do they want to take any risk, right? So they are risk averse. They think of the worst situation at all times. Decision rules, maximax, where you look for the highest possible outcome. You are a risk seeker, right? So you look at all the highest payoffs and you select the highest out of the highest. Maximin selects the alternative with the highest return under the worst situations. So you look at all the worst situations and out of the worst situations, you look at what the best is. Minimax regret is where you don't want to regret at all. So therefore you choose the option where you have the least amount of regret. Expected value is basically average calculation, and risk neutral managers will generally make their decisions based on expected values. So, payoff tables are used, right, to make these decisions. So you all know how to calculate expected values as well. The outcome multiplied by the probabilities, right? And expected values are often good when decisions are repeated multiple times, right? Well, how do you calculate value of perfect information? We have to take the expected value with perfect information. If we had perfect information, what would our expected value be? Minus expected value without the perfect information. Best outcomes, yes. And expected value without perfect information is if you didn't have any knowledge, what option will you choose? The highest one. You subtract the two, the difference in value is the value that you would pay to obtain perfect information. Decision trees are also drawn to make decisions. Yeah, it's hot. Sensitivity analysis basically measures how sensitive variables are to, or how sensitive profit is to changes in different variables. How do you calculate price sensitivity? Required decrease in sales to become like zero profit divided by the total sales into 100. Basically, this required decrease and increase is the profit amount. The lower the percentage, it's more sensitive. So that's a little risky then. Right? Lower percentages are more sensitive. Variable cost sensitivity required increase in variable cost. So how much more can variable cost go up before profit becomes zero? That's basically the profit figure that you have to take at all times. Divide by total variable cost into 100. Sales volume sensitivity, we look at the decreased contribution. How much contribution should decrease by before profit goes to zero? That's also profit figure. Divided by the total contribution into 100. For sales volume, we use the total contribution. Fixed cost sensitivity required increase in the fixed cost. That's also the profit amount, right? That how much fixed cost should increase by before profit goes to zero. It's basically the profit amount. Divide by the total fixed cost into 100. Drawbacks, it's optimizing techniques, and you generally make a lot of assumptions here. We assume that only one variable is changing at a time. In reality, multiple variables may change at any particular time. Stimulation is like a system where we change many variables at one time, right? But what happens with stimulation is we cannot do it manually. It's done using computer technology. Very complicated. Focus groups, it's a market research technique where you get like very well-educated people in a team and make them discuss on different aspects of product, right? So, market research is also undertaken in order to find out about customer needs and wants, right? So that why is market research done? Because you can reduce the level of risk and uncertainty. That's why it's relevant in this chapter. Okay, then we are going to a question on risk and uncertainty. The last question you sent, I couldn't check. I will check it. Because last 2 days I had another class that was very occupied with like late nights. Yesterday also finished the class at 3 o'clock in the night. Yeah. Because that student has an exam, right? So she wanted me to like do it. It's a foreign student. So I was finished at 3 last night. Started at I think about 11 o'clock. No, it was it's a foreign student for A-level, O-level business studies. She has exam. Tomorrow is today's the paper. A-level exams, O-level exams. So she wanted me to do more questions after like normal class hours. So I was like basically doing the class thing. So last whole week I was busy with her exams, so I couldn't. Every day I had classes with her. Okay, store hotel. The managers of did I do it? No, right? Store hotel. The managers of store hotel are trying to decide on their pricing strategy for the next financial year. Occupancy levels depend on the price charged, and the managers are trying to decide between charging 180, 200, or 220 a day. The variable cost of running the hotel are uncertain due to fluctuations in prices of food and energy. Cost may be high, most likely, or low. Cost, we don't know what it's going to be like. The management accountant has produced a profit table payoff matrix summarizing the possible levels of contribution for each price charged. Right? So the state of variable cost is given, like it can be 180, 200, or 220. If the variable cost is high, then they have given you the amount of profit, right? Yeah. If so, oh wait. This is the state of variable cost, high, low, most likely low. 180, 200, and 220 are the client fees. So when you charge a client fee of 180 and if the variable cost is high, you will make a profit of 1,339. When you charge a client fee of 180 and if the variable cost were most likely like what you call like a medium level of cost, then the profit will be 1,496. If in case the variable cost was low, then the profit you will make at that point is 1,733. Right? If you charge a client fee of 200 and the costs are high, most likely low, they've given you the different profits. The probabilities of variable cost levels occurring at the high, most likely, and low levels are estimated to be high. Variable cost can be high 10% of the time. It can be low, most likely 60% of the time, and it can be low 30% of the time. Match the fee that should be chosen using the maximax and maximin decision rules. Now, maximax guys go with the what outcome? Highest out of the highest. Yeah. So for every price option, you look at the highest outcome. For 180, what's the highest? 1,700. For 200, 1,706. For 220, 1,575. So out of the highest, what is the highest? 1,733. So this guy is going to select what price? 180 price option. How does the maximin guy select? You take all the lowest outcomes, highest out of the lowest. So what are the lowest outcomes? At 180, what's the lowest outcome? 1,339. At 200, what's the lowest? 1,378. At 220, what's the lowest? 1,313. Out of all the lowest, what's the highest? 200, no? So he will select 200. Next, same question. I'm not reading it again. Okay. What are the expected values of contribution for each strategy? So how do you calculate the expected values? For 180 price, how will you calculate the expected value? 100,339. Most high is, what's the probability? 0.1. 1,339 into 0.1 plus 1,496 into 0.6 plus 1,733 into 0.3. Correct or wrong? Right. So tell me the value. Shall we calculate the expected? Hi, Atika. Atika, how's studying going? And have you watched last week's TRG? Because I didn't see you join last week. Have you watched it? So how do you calculate expected value for the 180 price option? Okay. Have you done papers? Like, are you able to answer? I sent some papers on the group today. That's just for you all to practice. You have those resources. I got it from Telegram group today. From ACCA. Yeah. I thought I'd just send it to you also if you all want extra maybe. Try those questions. I sent those short notes as well. Yeah. What is this? What's the... I sent it, right? tuition is okay, but too short, man. The notes are like too very it's too short.
But for
I will not recommend it.
I used to go to tuition.
You can just do questions from there, no problem. Guys, what was the expected value here? Okay, then how do you calculate for the 200 option? I'll just do only 200 option. 1378 can happen 10% of the time. So you multiply by 10% that. Plus 1509 can happen 60% of the time, because most likely is 60% of the time. Plus this is 30% of the time. What's the expected value for that? If you're very confident with your answer, you can directly go with B.
1500.
Yeah, so it's pretty easy, right? The only problem here is I can't select a rectangular box. So I'm not calculating for C because I'm confident on my answer, right? It's B, but I really can't answer. So I'm skipping. The answer is B, guys. What are the regrets for each fee strategy for the low levels of variable cost? How do you calculate regrets? Oh no, how do you calculate regret? We have to go one by one. If the state of variable cost was high, we have to do it horizontally. If the way, no, they have calculated the regrets for 2. Can you see that? If the level of regrets were, can I take a screenshot of this? Oh. Okay. Okay, so how do you calculate the regrets? How do you calculate the regret? You first look, okay, from the highest outcomes, but you do it horizontally. Highest, if the variable cost was high, you would have wanted to go with which price option? That is, you would have wanted to go with the 200 option. So in case the variable cost was high and you had picked 180 option, what's your regret? So you have to take 1378 minus 1339. 39. They've calculated the regret for that, so we don't have to waste our time. We only have to calculate it for the last one. So now low price option, what's the best situation to be in this? So here you have 0 regret, correct? If you had selected 180, you will have 0 regret. But if you had selected this, what's your regret? 1733 minus 1706. Okay. What if you had selected this? What's your regret? You have to compare it with the best outcome. You feel like in vain I should have gone with 180, I could have made 1733, but because I went with 220, I made how much less? I could have made 1733, but now I made 1575. So I made how much less? 158. So 27,158. What's your 0, 27,158? D, I can't select again. D is the answer. The management of store hotel are risk seekers, they're saying. Which decision-making technique is appropriate for risk seekers? Huh? What did I do? Oh, I'm sorry. I accidentally put maxim in, but it's max, right? I told you all it's maxim. Identify by selecting the relevant box in the table below whether each of the following statements regarding the use of expected values in decision making are right or wrong. Now, you all tell me the answers. I'm going to go with your answers. They accurately reflect the risk associated with each decision.
No.
They accurately reflect the risk associated. You all are saying incorrect. What is about Hashmat? Okay. What do you say? What about Atika? What do you say for that? They accurately reflect the risk associated with each decision. Expected values. Does it accurately reflect the risk? Atika, what would you have gone with? You would have said incorrect. I just allow you to read this. And then you will tell me. Yeah, they say expected value can be seen to ignore the risk as the range of possible profit outcome is not considered. You only take it's average, right? It's average, right? Listen. Expected value is average. It's average, right? Whatever you're using probabilities and taking an average. Averages, what happens with averages? There are certain outcomes that can be very high and very low. Can you see that? So it basically dilutes. But anyways, what's your answer going to be now? You all tell me. Okay, Ashmit has changed his decision. They are more appropriate for actions that will be repeated many times. I told you expected values are good for outcomes that are repeated many times. They may be unreliable as the probabilities used are estimates. They are used by risk neutral decision makers. Right. So this is that area, risk and uncertainty, which is a pretty simple area. It's not hard, right? It's not at all hard. Be very careful with the regret table, right? Know which side to go with the regret table. See, like, okay, look at the outcomes, right? That is what you look at. So if this outcome was there, what is the best price we should have charged, right? Then you circle that and then select the other two, which other two decisions you compare with that. Regret table, just be very careful. Do it smartly. There is no problem with that. After risk and uncertainty, budgets, budgetary system and types of budgets.
Where's the exam center located?
Where is the exam center you have got? Have they given you all exams and have they? What's the one? Colombo. So not so fifth.
Yeah.
In what?
Distance learning center.
Oh, distance learning center.
Mine is always. Distance learning last.
Budgetary systems.
They are taking the payment. One take the payment. In distance learning center.
Budgeting and control. Oh, even Athika is doing the exam at distance learning. Budgeting and control. So you all know budgets are prepared. Like, there are three kinds of planning, and budgets are a system of planning, right? Budget is a method of planning, right? You have long-term planning, plan for the 5 to 10 year time. Then, long-term plans are based on your objectives. Budgetary systems, you can, are useful for planning, even controlling. Why? Because your final actual results can be compared with budget, right? It can motivate staff. It's a method of communication, and also you can assess your performance based on budgets. When you are preparing your budgets now, increasingly it's important to understand ethical aspects, and you have to incorporate them in your budget. For example, if sourcing ethical raw materials is expensive, you have to give that raw material a little bit higher budget as well. So you have to incorporate aspects of being ethical and sustainable when preparing your budgets as well. There are different kinds of budgets. What is a rolling budget? A rolling budget is a budget where you always want to have a budget for a particular period. So when one quarter finishes or one period finishes, you plan on a rolling basis for the next quarter. Remember? Rolling budgets, right? So they're suitable in situations where the environment is rapidly changing, but it could be very tiring task to do rolling budgets. Yes. Don't remove that wires. It can be a very tough task to prepare rolling budgets. Why is that? Because you have to continuously update, right? It's time consuming, right? And it's expensive, right? But however, the other thing is the employees can get so much, they can spend so much time preparing the budgets that they may oversee other important aspects of the business. Then you have incremental budgeting, or a very easy type of budgeting. It's suitable in a stable environment, right? Where you take last year's budget and simply increase for this year's, like inflation and small increments, right? So it's very easy to do, but the problem is last year's inefficiencies are carried forward to next year. right? And last year, if you spent more, this year also you'll be encouraged to spend more.
Based on last year's budget for
Last year's budgets. Sometimes it could be actual, but most of the time you take the last year's budget. That's the whole idea. Last year's budgets could be outdated, and if so, then this year's budget is also like outdated, right? Zero-based budgeting is the complete opposite, where every single period you start like zero-based.
It's like when they are, there's a question regarding like budgeting, and C questions. Like say, implemented budgeting, we have to like recommend on the form of budgeting.
Yeah, they might ask you, what is it a suitable method of budgeting?
Like implemented budgeting. And then the marketing scheme, can we don't use either of them, zero-based budgeting would be better.
Maybe they've asked you, the question might have asked you to recommend whether it was a suitable technique to use.
Or maybe they have to assess the budget.
If they ask you to assess the system, you have to talk about drawbacks, what do you think, whether it's a suitable method, what do you think is better in this situation, then you have to evaluate, assess, you have to talk about those, right? So then, yeah, zero-based budgeting is when you budget right from the beginning, right? Yes.
Yeah, because the variance. So the first A part said that calculate the material usage, and B and C each had calculated yield and one is mix. So this, if I know yield and mix, I can obviously find usage, and that's how the answer was already. So is it okay like if we do B and C first and then take those values and put them?
But there should have been a way of finding the usage first. That's why they gave usage first. No, but okay, in the exam, if you get stuck, no problem. Work backwards. If you get stuck, work backwards. Not an issue.
I do the last two.
No, she's saying in the same question, they asked us usage first, then the other two. But she knows to find the other two, she doesn't know to find usage. So then no problem. You can work those two, add to yield and mix together gives usage, right? If you're stuck, you can do it that way, no problem, right? That will give you answer. Yeah, that's because it's final answers that matters, right? Zero-based budgeting is when you prepare right from scratch. This is very suitable in a situation where the environment has changed a lot. But you know, some companies, they don't only have to always use zero-based budgeting. What many governments do is on and off, they use zero-based budgeting, and the other periods, they use incremental budgeting. Can you understand? So it can also be performed as a timely exercise. Because what happens with zero-based budgeting is every single expense, they will have to draw a decision package, they'll have to brainstorm, think whether it's needed, not needed, and you have to get approval, and then only you go ahead with a certain expense. So the resources are very accurately allocated. It's a very good form of budgeting, but it's extremely time consuming and expensive. Because they are responsible as somebody else's money. So they have to be careful with that.
Get the money, we have to give
Budget. That's because you all are doing zero-based. So the resources are allocated definitely more efficiently. There is no slack because you have to justify everything. So you cannot put slack in. It improves understanding of cost. It increases staff motivation because they are also involved in the budgeting process. And it's mainly used in the public sector. However, it's time consuming. Staff may need training to use this. Difficult to define decision units. It's a rigid and like time consuming process. You might neglect long-term, you might neglect your focus or attention on other important aspects of business. It could be very demotivating as well because employees are continuously asked for justification and employees may not want to give that. Activity-based budgeting, here you find the cost per drivers and you budget based on this. Now you know, okay, cost per delivery is this much. This year we are going to have this many deliveries. Therefore, the total delivery cost will be number of delivery into the cost per delivery. So you are using the cost driver to do your budgets. So if you reduce your activity, you can if you're basically reducing activity, meaning, for example, reduce your deliveries. This will reduce the overhead cost. In turn, that will reduce the total budgeted cost as well. So it's about managing your cost drivers and the activities. It's activity driven. It's a way of controlling the drivers and then controlling the costs. It shows you what activities do not add value. Maybe you can reduce on them. It's the attention is focused on reducing the cost here. Disadvantages is a complex budgeting system. You have to find the cost per drivers, which is like a 4-step process. Right? Remember? Staff may be resistant to use ABC, especially if they have not learned their principles. And in a real world company, to do ABC is not very easy, right? You gather so much data. Staff may require training. It may be difficult to identify the cost drivers. Detailed data may be necessary. What is feed forward control? Is basically before something happens, you try to understand, okay, this might happen, and therefore you're trying to rectify what you may do in the future so that the correct action is taken. Feedback is after something happens, you give feedback. It can either be a positive feedback or a negative feedback. What is a closed loop system? This is when a feedback comes to you, right? In any form of feedback comes to you. Open loop system, do you get feedback? No. See, feed forward. Now, if we were going to do work according to actual result, you can see our performance would have been very low. But we identified at the current date. Therefore, we rectify our mistakes and we do change our action plans so that we can go according to the budgeted plan. So, master budgets are there where that is the budgeted income statement, balance sheet, cash budget altogether. Functional budgets are the budgets for different areas, sales budget, material budget, you'll have done for MA, labor budget, overhead budget. But is flex budget is when you can change a budget for the actual level of activity. So budget is given for about 2-3 levels of activity. So we can flex it. Flexible budgets are also prepared in a way that, you can flex it according to the actual activities. There are two kinds of budgeting. It can be top down, where the management, top level management sets the budget and they impose it on the bottom level. It is suitable in a situation where there are unskilled workers and let's say very critical situations, right, where there is no time to discuss. So not that it's a bad method, it's a good method in certain situations. Just like that bottom up budgeting, you get everyone involved in the budgeting process. So it can be motivating. There are 3 kinds of budgeting styles. Budget constraint, you're too much focused on the budget. Profit constraint, you're okay as long as you make profit. Remember? Non-accounting is basically you're giving importance to like customer satisfaction and things like that. So it's okay, whatever we spend, our budget doesn't matter as long as our non-accounting goals are met. Right? So traditionally, budgeting was like a way of reducing cost. But I think you all learned about the beyond budgeting concept, right? Where we do not only stick to a budget, right? Like for example, we do not judge our managers only based on budget. We judge their performance based on like the actual situation. Remember, can you understand? So we don't no longer go by a full like strict budget. We allow variations for the budget when the actual situations change, right? Because we don't want to be too strict on our staff, especially in areas where they have no control over. And in today's time, the main thing is the environment is rapidly changing. So we need to give them, what do you say? We need to give them some space, right? Or we need to give them some, let's say in a tough situation, if they have done better than what they would have otherwise, we have to give them some credit for it. So we want to motivate our staff at all times. We want to move ahead with their support, right? So we do not stick to a traditional budgeting system. Now we have introduced the concept of beyond budgeting, where budgets are allowed to be flexible. Okay. So that's budgeting, but I'm also going to look at the quantitative aspects of budgeting before we start questions on it. What were the quantitative aspects of budgeting we learned? We learned about the need for forecasting, simple average growth models, like how to calculate growth. We learned the high-low method, which you all already know. Time series, we learned about the time series or the sales can be affected by the trend, seasonal variations, cyclic variation, and random variations. Random variations and cyclic variations we often do not take. Random variations are generally not taken in the budgeting. Why? Can we predict random events? Right. So that is not taken in a budget. Cyclic variations also for your ACCA syllabus, it's not going to be tested much, right? How do you calculate the trend? There are 2 ways to calculate trend. That's the normal way the sales moves. It can be calculated using what? The moving average method, right? Or what is the other way of calculating the trend? Trend is the way that, what do you call? It's the way in which sales or something moves over time, the pattern. You can calculate it using the moving average or the what's that? Regression analysis. Y equals A plus BX. We can even use that to calculate trend. Seasonal variations are variations that occur due to different seasons. It could be the weather, it could be annual events, or it could be the timings that people shop, right? Cyclic variations are variations that occur due to the economic cycle, right? Random variations occur due to random events. Identifying the trend. Trend can be identified using the line of best fit or the regression method, right? Or even the moving average method. How do you calculate moving average? Do you all remember 4-point moving average? Remember that because the what happens with the 4-point moving average, the total average doesn't go in between one, right? It's basically, it doesn't have a period that it corresponds with, it's in the middle. So to bring it to the mid, to bring it in line with the period, what do? You have to calculate an average of the average. You all remember that? This can come right in exams. I'm going to do a question. Identify seasonal variation. How do you find the seasonal variation? The actual sales minus the trend. Trend is what? Trend is the final moving average you find. Okay. Do you all remember this? How you adjust this seasonal variation? You have to take the daily seasonal variation and the addition. Now this is minus 3.3. No, it should add in the additive model. It should add up to what? 0. So you need to that minus 3.3. You have to add that back, meaning an equal amount is added to every day. Remember that? Right. So that is the adjusted average. Multiplicative model. How do you find the sales there? Trend equals or seasonal variation equals actual sales divided by the trend. Actual sales divided by the trend, right? That's the seasonal variation. In the multiplicative model, basically, if there are 5 periods, this should add up to 5. It's almost 5 here, no? So we ignore that. Can you understand? If it is 6 periods, it should add up to 6. Otherwise, you have to do adjustment. How do you get the deseasonalized sales? Actual sales plus negative variations, or actual sales minus the positive variations. Do you all remember seasonally adjusted data? To get deseasonalized sales, for the additive model, subtract positive variations from actual data and add negative variations. For multiplicative model, how do you find deseasonalized sales? Actual sales divided by seasonal variation factor. These are areas that are very often coming now, right? Because these are new syllabus areas. Have you studied this? Right? So deseasonalized sales multiplicative model, how do you find it? Actual sales, the Y divided by the seasonal variation factor. So here for Monday, 7,500 divided by 0.91. Deseasonalized sales. What do you mean by deseasonalized sales? After the seasonal effect, sales were 7,500. What was the seasonal effect? Seasonal sales were only 91%. So what was 100%? Before the seasonal variation, how much was the sales then? Can you see that? That's what it means. Because of the season, it has reduced to 91%. Can you see that? Next one, 0.898, meaning the 8,100 represented that much. So what was the sales before that? So we divide it by that. Sales meaning without the seasonal effect. If not for the seasonal effect, what would sales be? Can you understand what it means? Forecasting using time series, I think you all know this, right? There the trend line is given and you have to, they'll take X is a time period. You can find the sales and then you have to adjust for the quarter accordingly. So this is the time series model. It's a way you predict sales of the future. Correlation, you all know relationship between variables. They can be positively correlated, meaning the two factors have a positive relationship. Negative correlation, when one goes up, the other goes down. There can be perfect correlation. It can be perfect positive or perfect negative. It's like in a perfect straight line. Zero correlation doesn't have any relationship. I saw in that paper I sent you, they had asked to calculate R, the correlation coefficient. So the formula for R is given in your exam. Did you do this? The exam paper also had this. No, I'm talking about the paper I sent in the group today.
So that's the exam.
That was not the exam paper. Today what I sent is a different paper.
But I think I have that.
That paper had it, right? So this also, these are MA areas, but you still may be asked to calculate it. This formula is given in the exam. In this, when you're calculating, you have to be very careful with the brackets. Coefficient of determination is R squared. It basically tells you how much of the how much of the dependent variable is affected by the independent variable.
The other one is how.
Basically, how much of sales is affected by advertising. You understand?
R is
It's a relationship.
it's strong.
Strong or not. Coefficient of determination shows you how much of X, sorry, how much of Y is affected by X. Right? So basically, let's say if this is 60%, that means 60% of sales change is due to advertising change. The other 40% of changes in sale is due to other factors. Right? Regression analysis is the way that you can calculate, A and B, right? What is A? A can be the fixed cost, B can be variable cost. You generally, even with high-low method, we calculated variable cost first. So even with regression analysis, we calculate B first. Formulas are given in the exam. And A is the fixed cost, right? So then you have learning curve. You all remember learning curve? You will be asked to calculate like decrease in time. And what is the main theory we use with learning curve? The cumulative average time is assumed to decrease by constant percentage of learning every time that output doubles. So what's the idea behind learning curve? When you repeat a job many times, right? Employees gradually learn to do it better. So they become more productive, they become more efficient. As a result, the time taken continues to reduce. But how does the time taken reduce according to the theory? Every time the output doubles, we assume that a constant learning rate applies on the what time, not the total time, on the what time? On the average time. On the average time. Every time output doubles, the average time is reduced by a constant percentage. Right? There are two ways to calculate learning. One is the reducing cumulative average time by the learning rate every time output doubles, or by using the formula. Remember? Right? What's the learning formula? Y equals X to the power B. What is Y here? Average time to make X units. This is given in the exam. Y is the average time, but they don't tell you what Y is. Y is not the total time. Y is the what? Average time. A is the time taken to make the first unit. X is the number of units you're looking to make. And B is the log figure, log R. That's log learning rate divided by log 2. Right? And then with learning, at a certain point, we assume that after this, there will be no more learning. And this is the time we are going to be taking for all units made after this. That is called the steady state. Yes?
Question was the learning rate, the learning stops at 1,000 units.
Okay.
So then from 0 to 1,000, we should estimate that that was like going to constant rate down, right? The cost should be like the labor cost per hour.
We have to find the average time it takes to make 1,000 units.
Yeah, and then I took the total of that. Then using the average, I took for the remaining parts. But then the answer I had done like took the whole amount just by using the average.
They are asking what is the question? Did they ask you? Yeah. Did they ask you what's the time taken to make the 1,000th unit?
I take the total, like it was like a total cost question. Time taken, the total cost for producing 250,000 units. But then learning stopped at 1,000. So we had to find
We have to find the time taken for the 1,000th unit.
999.
Yeah, that's why you do.
I took it as from 1,000 to 250.
No, they would have told for all units.
I didn't see that.
You have to send me that question. Let's check it.
But I thought I was correct for assuming that.
Send me that question to see. So let me finish this. The steady state is basically after a certain point, we assume that time taken to make the certain number of units is the time taken to make all units after that. Right? That's a steady state. So learning effect works best when the workers are motivated, when you have a low turnover of workers, meaning workers don't leave. So they stay with you and they learn. Right? When the production process is itself repetitive, when you use labor-intensive methods of production, right? And when the process is new, because that's when they learn the most. Limitations, you need to have stable conditions to make sure learning happens. Employees need to be motivated, but maybe not at all times they will be. They may not be motivated. If they are not, then it will be very difficult to implement learning. You need to have accurate and appropriate learning curve data to estimate there can be inaccuracy in estimating the initial labor requirement for the first unit. The time taken to make the first unit, we might not be able to estimate it correctly. If we don't estimate it correctly, then the data is wrong. Inaccuracy in estimating the output required before reaching a steady state. Now, I can easily tell you 1000th unit is the time taken to make 1000th unit is the time taken to make all other units after that. But sometimes in reality, it may not be so. It may be different. Right? It assumes a constant rate learning factor, but in reality, different rates of learning may be applied at different times. So those are the limitations. Can you tell me which question Azmat you're talking about? So we are done with the theory on budgeting. Let's look at questions on budgeting. Is it one of these questions?
No.
Let's look at the section C question.
I don't know the same question, but it's all will be different.
Very difficult. That's why I send that paper in case you all want more questions to practice. Did you all go through the ACCA that timed exams? Still you all get access to it. Should ask them. No, I told you there are recorded papers.
No, they don't have it. I don't.
You're gonna ask it. How does she get access?
The past 5 years.
You have to fill the form.
You fill a form.
Yeah,
it
it
seems.
is every form that came.
Go and speak to Fali. Go and speak to Fali.
What do you call it?
The ACCA like recorded sessions on the portal. Tell me Sharfa has recorded them and ask. Azmat, is sending the paper.
I was like, the paper, see the record.
Yeah, okay, no problem.
And I have checked, like,
So you can mark yourself.
Yeah.
Okay, Newton School. Newton, Azman, meanwhile, you can send that paper. I'll look at that as well. Newton School's head teacher has prepared the budget for the year ending 31st May 2005.
Their webinar. But by the exam.
Yeah, you can watch them. The government pays the school 1,050 for each child registered at the beginning of the school year, which is 1 June, and $900 for any child joining the school partway through the year. The school does not have to refund the money to the government if a child leaves the school partway through the year. The number of pupils registered on 1 June 2004 is 690. See what they told now, you all are not listening, right? Azmat, you can listen to this. Azmat is not listening.
I
Listen.
said it, ask the question.
1 June and
60
At the year I did right in class.
DDP code.
and
TR ko I did. Okay. First, can I go ahead with this question? Okay, then we look at it.
I think I registered for that. And me doing.
Okay, now listen, which is 1st June. 900, the government pays the school 1,050 for each child registered at the beginning of the school year, which is 1 June, and 900 for any child joining the school partway through the year. The school does not have to refund the money to the government if a child leaves the school partway through the year. The number of pupils registered on 1 June 2004 is 960, which is 10% lower than the previous year. Based on past experience, the probabilities for the number of pupils starting school partway through the year are as follows. Joining late, 50 students 20% of the time, 20 students 30% of the time, 26 students 50% of the time. The head teacher admits to being poor with numbers and does not understand probabilities. So when calculating budgeted revenue, he just calculates a simple average for the number of pupils expected to join late. His budgeted revenue for the year ended 31 May 2005 is therefore as follows. Pupils registered at the beginning of the school year 690, rate per pupil 1050, so total income. By for everyone joining at the beginning of the year, you get 1050, right? Average expected number of new joiners 32. Rate per pupil he has taken as 900 because everyone who joins in the middle is given 900, but government gives 900 for them. So total income you can get from the government is 753,000 during the year. The head teacher uses incremental budgeting to budget his expenditure, taking actual expenditure of the previous year as starting point and simply adjusting it for inflation. So repairs and maintenance last year's was 44,000. He took the actual cost and adjusted. 44,000 this year he has increased for 3% inflation. Salaries actual cost was 620,000. He has increased by 2%. Capital budget expenditure 65,000. He has increased by 6% this year. But they have given you notes. Note number 1. Repairs and maintenance. 30,000 of the cost for the year end 31 May 2004 to standard related to standard maintenance checks and repairs that have to be carried out by the school every year in order to comply with government health and safety. These are expected to increase by 3% in the coming year. In the year ended 31 May 2004, that's last year, 14,000 was also spent on redecorating some of the classrooms. No redecorating is planned this year. So is it right to take that also? They have taken the entire 44 and increased by 3%. This year we are not redecorating. They have just put a big slack there. One teacher in the salaries, one teacher earning a salary of 26,000 left the school on 31 May 2004 and there are no plans to replace her. However, 2% pay rise will be given to all the other staff who are remaining. So out of the 620, we have to remove that guy, this one who left, right? Her salary has to be removed. Then you have to increase by 2%. The full 65,000 actual cost for the year ended 31 May relates to improvements made to the school gym. This year, the canteen is going to be substantially improved, although the extent of the improvement and the level of service to be offered to pupil is still under discussion. There is a 0.7% charge that the cost of the canteen making will be 145. There is a 30% chance that it will be 80,000. These costs must be paid in full before the end of the year. But I don't know why they have not even taken the canteen cost. They have gone and taken last year's gym improvement cost in this year's budget. Can you see how wrong it is? The school's board of governance who review the budget are concerned that the budget surplus has been calculated incorrectly. They believe that it should have been calculated using expected income based on probabilities provided and using expected expenditure based on information provided in notes 1 to 3. Oh, they said even the income is wrong, it seems. Income, they have taken the average number of students to be 32. How did they take that? 50 plus 20 plus 26 divided by 3. See whether it comes to 32. They have taken the average number of pupils 32. How? 50 plus 70, 20, 70, 96. They have divided by 3. But they are saying no, not to take it like that. They are telling to take it based on the probabilities. That means how do we take? We have to take the expected value. So 50 into 0.2%. Sorry, 50 into 0.2 plus 20 into 0.3 plus 26 into 0.5. We have to take the number of pupils like that. And even for the capital budget, we don't take the 65,000. It's not going to be spent. We have to take the cost of canteen building. That also they are asking us to take it based on expected expenditure. So we have to take 145,000 into 70% plus 80,000 into 30%. For the last 3 years, there have been shortage of cash despite a budget surplus being predicted. Since the school has no other source of funding available to it, these shortfalls have had serious consequences, such as the closure of the school kitchen for a considerable period in the last school year because they don't have money. Although this is showing like they're having money, but they don't have money, it seems. Meaning that no hot meals were available to pupils. This is thought to have been the cause of the 10% fall in the number of pupils registered at school on 1 June 2004. The school's board of governance have heard that zero-based budgeting and has requested advice on whether its application would be useful in improving Newton's budgeting process. Considering the views of the Board of Governance, recalculate the budget surplus deficit for the year ended 31 May 2005. They ask you to recalculate this. How did they get this 690 employees? No, the number of students registered on 1 June was already 690. So 690 beginning of the year registration is right. Right? So let's recalculate it.
Today is added to the elements.
What?
And this to the elements. Today is center.
It's in the LMS. I have not checked the LMS. There are these things are there. That's why you're telling me it's not there. It's not there. It's there on the LMS.
Yeah.
So pupils registered at the beginning. That's not going to change. That is 690. Into 1 student, you're getting this much. Average number of pupils, expected number of new joiners. New joiners, how are we supposed to take the number? We have to take the expected value. That's 50 into.
Is it called the revision game plan?
Yes. Razi, how's studying going? Have you studied well enough? I saw you have registered for exams. Have you watched all the recordings? How much is that, this girl? That's 29. So 29 into 900 then. What is your expected income then? Okay, what are your expected expenditure? We have to now adjust according to what they have said. Repairs and maintenance. They said last year 30,000 of the cost relates to standard maintenance, and they have to be carried out by school every year. These are expected to increase by 3%. So 30,000 we have to increase by 3%. Correct? 3%.
They can take calculator, right?
And they say, listen, 14,000 was spent on redecorating of the classroom. We are not going to do it this year. So do we have to take it? No. What did you say, this boy?
Like,
Yeah, you can take calculator.
it like
What's the calculator you have? FX models are okay.
those ones are.
Yeah.
It's for
Salaries.
perfect.
Kind of places. I don't know, double check, but I'm not sure. The salary is one teacher earning a salary of 26 left the school. So there's no plan to replace also. So when the salary is 620,000, I remove the 26,000 salary. And then I increase by 1 or 2%. 605,800. Capital expenditure. This 65,000 is not even going to happen this year. But what's going to happen this year? They are going to be building a. No. They're going to be building a canteen. They're going to improve it. And there's 70% chance that the cost will be 145 and there's a 30% chance it will be 80. They have said they believe that it should have been calculated, the other one using expected income based on the probabilities given and using expected expenditure based on the information provided in 1 to 3. That means you also have to take expected expenditure. 145,000 we are expecting to happen 70% of the time. Plus 80,000 we are expecting it to cost 30%. What does it come to?
Then 500.
100 and? What's the total expenses? What's its surplus or deficit? Now, when you do the correct way, it's looking like a deficit. Can you see that?
Head teacher made this mistake. Wow.
Because she's not a finance person, she's a head teacher. That's what she's saying. They got a deficit of 5740. Where did we go wrong? Oh, okay, I think that person, salary guy, left halfway. I did not consider that. One teacher left the school on 31st May 2004. She left the school halfway through. I really did not even see that. I really did not even see that. That head teacher, she left the school halfway through. Year started 1 Jan. When did the year start? 1 June. 1 June the year started. No. However, 2% pay rise will be given to all staff with it's not that person time the teacher left. Teacher left on time. She left on the end of the year. No problem. The pay rise will be given to all staff with effect from 1 December. So the pay rise is only given halfway through. So basically, head teacher leave is not the problem here. 620,000. Let me do the working below. What's the two salaries expected this year? Salaries expected this year is 620,000 minus 26,000. So salaries expected this year is how much?
How many marks would we have lost?
We would have lost about 2 marks, I think.
Marks?
Yeah. It's important working. Why we lose the mark here and the mark here?
So we get the mark there on figure.
Others we get.
I mean, that.
This one depends. Name of this, no. It depends on how they have set the marks. Newton school. So guys, listen, the first 6 months, no increment, right? So they'll simply be paid half of this. Correct? The next 6 months, that's December, January, February, March, April, May, June. 7 months. No, May, 6 months. It will be this amount, that's a half amount, right? Into 2% pay rise. So the total salary will be. Can you see that? Now we got that.
Yes, but sometimes they don't have a mark that last year. Just the later they give the marks.
Yeah, that's the thing. I can't tell you for sure. It depends on the marks. But sometimes they can give you carried forward marks. Discuss the advantages and disadvantages of incremental budgeting. Advantages, incremental budgeting is very easy to perform. It makes it possible for a person even without an accounting background to perform it. Incremental budgeting is also very quick compared to other methods of budgeting. The information required to complete it is also very normally readily available. Disadvantages, on the other hand, incremental budgeting encourages inefficiencies, right? Because it does not question the preceding year's figures. We do not discuss, they're asking to look at both sides. On which it is based, no one asked how those figures even could be reduced. Similarly, in some organization, it encourages slack because departmental managers may attempt to use the entire budget up to 1 year, even if they do not need to. just to ensure that the cash is available again next year. Right? You might like now remember in the same question that 14,000 just they took it, right? Without even meaning. So they have not understood the cost properly. Errors from one year are carried to the next since the previous year's figures are not questioned. Next one they asked you, briefly outline the three main steps involved in zero-based budgeting. What are the steps involved in zero-based budgeting? First, the managers have to identify the different activities, meaning the different costs that they want to spend for. Managers are then forced, activities are identified by managers. Managers are then forced to consider different ways of performing these activities. These activities are then described by what is called a what? Decision package. Then you have to analyze the cost in this decision package. You have to state why it is needed, the purpose. Identify alternative ways of achieving it, the purpose. Then you have to see out of the alternative method, what's the best way of carrying it out. Establish the performance measures for the activity. Assess the consequence of not performing the activity at all or performing it at different levels. As regards this last point, the decision package may be prepared at the base level, representing the minimum level of service or support needed to achieve the objective. Further incremental packages may then be prepared to reflect higher levels of service. So this is the to give a basic service. This is the package we need to have, right? You have to come to a final conclusion after properly analyzing that package. And then you can say if you need to give more higher levels of service, more features need to be added to this decision package. Then you will rank all the packages in order of decreasing benefit. This will help management decide where to spend their money and what packages to choose. Right? This ranking of decision packages happens at numerous levels. There are many staff who are involved in that. The resources are then finally allocated based on whatever you have picked, based on order of priority up to the spending level. Use of ZBB at Newton School. Discuss meaning you look at both sides. When the word is discuss, you look at both sides. The extent to which ZBB could be used in Newton School to improve the budgeting process. So what are the benefits it will bring and what are the problems it may bring? Or is it suitable for them or not? You look at like a proper view, right? So look at a comprehensive view. There is definitely a place for ZBB at Newton School. At the moment, incremental budgeting is responsible for recurring unexpected cash shortages, because they are just using incremental budgeting and no proper consideration is taken to the situation, which is deterring new pupils from joining the school. Added deficit being predicted for the year 31st May 2003, perhaps 65,000 would have not been spent on improving the gym, and it would have not been necessary to close the school kitchen. ZBB would be good to establish the way cash is spent on those activities that are to a certain extent discretionary. So important expenses can be identified using ZBB, and expenses that are discretionary, not actually required, can be avoided. And if you avoid these expenses, you can avoid a deficit. So that's a big thing. Right. For example, although there's a need for pupils to have somewhere to eat lunch, it is not essential for children to have a quick cooked meal every day. It is essential that children do have somewhere to eat though. And as a bare minimum, they would need an area where they could sit and eat their sandwiches and have access to fresh water. ZBB would be used to put together decision packages which reflect the different levels of service available to the children. So how could have we given this service to them? We could have planned it ahead. For example, we could have planned whether the gym is important or the canteen is important.
But they need to give food every day, or else people will die.
Children have to bring food from home, but the ones who don't bring, what about them? In case like your parent misses food on one day, you go to the canteen, right? So it's important to have a canteen. And sometimes if your food is over and you're hungry, it's important to have a canteen in a school. Was unnecessary. So they could have identified that. They could have identified out of all these things, what are the most important things. Having a canteen open is very important to a school, because there are plenty of students, right? There may be students coming from homes where parents are working, so they don't have the time to prepare an extra meal, right? Sometimes students stay after school, right? So then the meals that you bought for the day are not enough. Canteen is very important to be in a school. For example, the most basic level of service could be the provision of an area for the children to eat a lunch brought from home. The next level would be the provision of some cold and maybe some hot food for the children. It doesn't mean that they have to have hot food. Children may be just wanting a place to go and get basic food from, but on a self-service basis. Finally, the highest level of service would be a restaurant for the children where they get served hot meals at tables. At Newton School, the catering manager would prepare the decision package and they would then decide upon by the head teacher who would rank them accordingly and decide how we are going to do this based on our budgets. Similarly, although some level of sport education is needed, the extent of different activities offered is discretionary. ZBB could be used to create decision packages for each of these services in order to prioritize them better than they are currently being prioritized. Is a gym necessary in a school, right? ZBB takes a long time to implement and would not be appropriate to all categories of expenditure at school. But much of the budgeting is very straightforward. Incremental budgeting could still be used as a starting point for essential expenditures such as salary, provided that changes in staff numbers are also taken into account. So it doesn't mean that they only have to use ZBB. They can use incremental as well along with this. Right? There is element of essential recurring expenditure in relation to repairs and maintenance. Since the cost of checks and repair needs to comply with health and safety, standards seem to largely stay the same each year. Some expenses you can use incremental budgeting, but certain expenses like where are you spending on the canteen, capital expenditure, for things like that you may have to use zero-based budgeting. Even like the gym, whether it's actually needed or what are the current sports activities we have. Instead of the gym, what do we have to prioritize? What do we have to make first? Right? You could have identified using ZBB. For that capital expenditure, I feel they should use ZBB. That can be a conclusion. And for the other two, you can use incremental budgeting to a certain extent. What was the question you were talking about this point? TR is here. What is the doubt you had in TRCO? They have said TRCO's management has said that any pricing about paraffin should be based on the time it takes to make the 1,000 batch of drugs. And they have said, however, it is believed that 80% of learning exists in relation to production, and this will continue until the 1,000 batch have been completed.
So that is okay, right?
You took the total time to make 1,000 batches.
So even the time it takes for 1,000 to right? So they multiplied that by 250,000. Yeah, 250,000.
Yeah, because that's the time we are using for. That's the average time for 1,000. The time taken for the 1,000th batch.
So what I think was
they have told TRCO's management has said that pricing decision about paraffin. So when you're calculating the price, it should be based on the time it takes to make the 1,000th unit. Yeah, because they are very clear, directly told here you have to take the time to make the 1,000th unit. When you're making a pricing decision, you have to use the time it takes to make the 1,000th unit. So we have to find that and use it.
So what I think was I got the average 2,000, right?
So you multiply that 1,000, then you have to find the average of 999, multiply by the total of 999. Time taken to find the 1,000th you find, and then multiply that by, because they are telling the pricing decision has been made on that. Right. They ask you to take. They have been very particular there. Any other doubts you had there? Other questions? It's 3:30 already. 3:15. I think we can do one more question before the break. Budgeting within Newton School. I want to do analytical techniques. I want to do the question on you know what? I want to do the question on this thing. Did I do this in class? Did I do this in class? Tail.
Yeah.
Yes, you remember the question for Roboco.
Yeah, it's in the Roboco is there in this thing. Wait a minute.
I'll just go wrong.
This I'm not doing now. This you all know. I think I did it. Regression, but please try these questions because you all can get questions on regression, right? Okay. Wait a minute, I'm looking for another language question. What is Roboco? Roboco, is it there here? Yeah.
First step.
Roboco, is it first chapter? First chapter means I want to repeat. What is Roboco? It's relevant costing. I'm mainly doing this areas today. Wait, this provoker question is not there. I'm trying to look for all. It's there. Big Chacos have done.
Same, right? Upland and
Mostly it's repeating only.
it's exactly the same, but they don't have different requirements.
Yeah.
Because I'm more almost, I'm done with section names. They follow the way it goes, leaves, halfway to section.
Theory don't miss, you all have to, theory has to be good. Yeah, but you can't ignore theory. I said, wait, I won't do regression and all, you all know how to do it, right? But please try this question. I want to do Bayako. Bayako has developed a new model of television. The estimated labor time for the first 12 unit is 12 hours, but a learning rate of 75% is expected to apply for the first 8 units produced. The learning index for a 75% learning rate is given. B is equal to minus 0.415. September's output, October's output, November's output, December's output is given. The different months, different outputs, and total overheads are given. What is the expected time for the production of the 8th television? Expected time for the production of the 8th television. How do you find that? Estimated labor time for the first unit is 12. But at a learning rate of 75, it is expected to apply for the first 8 units produced. 8th unit, we can use that doubling method, no? We don't have to use equation. Yeah. Then you can only find average, right? Yeah, you'll find for 7. So anyways, for 7, you have to use the equation. For 8, yeah, okay. We can first we use the equation and say y equals. What's the average time for 8th unit? Average time for 8 units. 8 time take to make the first unit. What's the average time? 5.06. What's the total time for 8 units? We need total time for 8 units. They are not asking you average time for 8 units. They're asking what's the expected time for the production of the 8th television. They're asking you time taken to make the 8th television. Total time for 8 is what? What's the average time for 7 units? This y equation, we can only find the average time. What's the total time for 7? Yeah, no, it looks so wrong. What's the time taken to make the 8th unit then? Time taken for the 8th unit. 40, this is the time taken for 8 and this was the total time for 7. So what's it? So how many hours? 3 hours. So you have to do it like that. If you took average time, you would have gone wrong.
You don't even get the actual answer, you get a minus.
That means
You take the average and.
no. She went to take this answer. She went to take this answer and she went to say it's 5. So what happens? You go wrong. Right. Read the question carefully. Same question. The first phase of production has now been completed for the new television. The first unit actually took 12.5 hours to make, and the total time for the first 8 units was 34.3, at which point the learning effect came to an end.
Only we have to take the.
What is the actual learning rate, and did the labor force learn more quickly or less quickly than planned? Here we can use that doubling method. The first unit took 12.5. Every time output doubles, the learning rate applies. Correct? So here output has doubled how many times? 1, 2, 3. What's the... Oh, wait. We need the average time. We need the what time? Average time. Because the learning rate applies on what time? Yeah, so here total time was 12.5, average also 12.5. Here total time was 34.3. What is the average time?
4.29.
So how do you find R? 12.5 into R to the power 3 equals 4.29. Correct? What's R equal to?
R
Cube root.
is by R.
R is the learning rate. They're asking you what was the actual learning rate. They're asking you what was the actual learning rate. So I have to find R, right? So what is R equal to?
Isn't it 3 to the power?
Cube root, no? Shall I do the steps mathematically? Okay, I'll do.
3 to the power.
No, R to the power 3. R into R is what? R to the power 3. Not 3 here. R into R is what?
No, I mean the equation.
R to the power 3.
That's not the other equation.
I got the answer.
What other equation? Every time the output doubles, the average time reduces by the learning rate. So R once, R twice, R thrice.
It's not the minus B equation.
Wait a minute. But minus equation is not a minus equation. What is R to the power 3 equal to? 4, meaning R cube is equal to 4.29 divided by 12.5. What is R equal to?
0.5.
R to the power 3 is equal to what? What is R equal to then? R is equal to cube root this. So what is it? So what's the learning rate? That means 70%. Correct. 70%. What was our expected learning rate? Expected learning rate was 75. So our expectation was 75% learning. That means time reduced by 25%. Actual learning is what? 70%, meaning time reduced only by 30%. So it has become what? Oh, time reduced by 30% now. It has become better. So 70%, the labor learned more quickly.
Why 30%?
75% learning meaning what? 75% learning meaning what? Time reduced by 25%. 70% learning meaning what? Time reduced by 30%. So what is better? 30% time reduction is better, right?
Yeah.
So 70% is better. So they learn more quickly. You're okay, Asmat. What you asking about another equation?
No, I mean the other equation.
No, you have to find R like this here. It's very difficult to find R. Other equation
No,
you can't find
like-
it.
Question I mean, do it.
You can't do it the other way.
Yeah.
You can't find because the equation R won't come. So then you have to do it this way.
So the power is going to be like unknown time.
Okay. The overhead production costs are expected to be the same as the previous model for which the following data is available. Calculate the variable overhead cost per unit using the high-low method. Can you all do it by yourself? You got the answer? 97. Wrong.
Yeah, I would say it's
Take the highest and the lowest, 2000 and 1000.
4,000.
Can you see that always take the highest and the lowest? That will go wrong. It's such a simple 310 minus 200,000 divided by 2000 minus. You have to take the highest and lowest. I've pinpointed that many times. Yes, and even in class, I've told that to students. Take the highest and the lowest, so it will go wrong. Identify by selecting for the relevant box in the table below whether each of the following statements regarding the learning curve model is true or false. Right? The learning rate shows the incremental time taken for each unit as the percentage of time taken for the previous unit of production. Every time output, learning rate shows the incremental time taken for each unit as a percentage of the time taken of the previous unit of production. Every time units produce doubles. Is that how we calculate? The learning effect is most pronounced where the risk is repetitive. Sorry.
Yeah.
The learning effect is most pronounced where the task is repetitive, when you do it again and again. The learning rate shows the incremental time taken for each unit. The increase in time.
The first one
Is the learning curve about the increase in time
no, when the production
or the decrease in time?
is a percentage, the time taken when the production doubles, right? Because the production doubles.
Shows the incremental time taken. Really? Is learning rate about increase in time or decrease in time? When learning rate applies, time taken decreases or reduces? Is it increasing or decreasing? Shows the incremental time taken.
If we don't understand, we just go.
Wait, I'll come to that. Let me finish the others. The higher the learning rate in percentage, the more the time per unit falls as subsequent units of output are produced. Higher the learning curve, meaning lower the time falls by, no? The other side is lower, right? So, high labor turnover and breaks in production may reduce the learning effect. High labor turnover, laborers are always leaving and you're taking break. Yes. First one, the learning rate shows the incremental time taken for each unit. That is the increase in time taken for each unit as the percentage of time taken for the previous, as a, wait, they are saying, okay, they are saying you calculate learning rate by taking incremental time taken divide as a percentage of the time taken for previous unit. Is this how you calculate learning? For previous unit. This is how we calculate learning. You can write it and see. Correct. This is not how you calculate learning. Right? Okay, okay.
Yeah, they say it's double. Yeah.
And
I mean, after the question.
I didn't read
If
it.
you have, the question was rephrase.
Let me see
It's
that.
double.
The first statement is incorrect. The learning rate shows how the cumulative average time per unit falls as the cumulative output doubles. It's about falling time, not about increasing time. That's what I was saying. Right? Which two of the following circumstances favor penetration pricing policy in relation to the launch of a new TV? Demand is inelastic. There are significant economies of scale. You can go with the low price. Company wishes to discourage new entrants to the market, so you're going with a low price. The product life cycle is short. If the product life cycle is short, we want to recover the money quickly, so it's skimming. Television has some new features that consumers value. If they are valuing it so much that others do not have, skimming. No, even in inelastic demand, we charge high prices because consumers are willing to pay high prices. So then you can take a break. And after the break, we'll continue with more questions. Right. What's the time now? It's 3:35. You all can come at 3:50. 15 minutes, okay? Let's continue. There's no one online. All right. Okay, we did questions now on quantitative aspects of budgeting. I did one on learning curve as well. I feel like I can go to variances. Budgeting we have done. Only thing I wanted to do one on moving averages, there's no question. So I'll just go to variances. So you all know the basic variances. These guys close at 5. No, that number she sent. So you all know the basic variances, right? You all know what variances are. Variances are differences between budgeted and actual performance, right? And when you calculate a variance, you have to, it's the flexed budget with the actual, not the original budget, right? So you have the sales variances, you have the material price usage variance. Those are the basic ones. Labor rate, efficiency. Then you know the formulas. You need to write all the formulas. You know that you can be asked to work backwards as well. Variable overhead variances, and you have fixed overhead variances. All formulas are given to you all. You all need to learn it and to apply it, right? So I'm not going to spend time there. Oh, this is not your variance one. This is the. There are two tubes, one for MA, one for PM. Yeah, this is the PM one. There's a fixed overhead variances. Then, guys, the main thing for you all at this level is what? The advanced variances. So with advanced variances, what are the main variances we looked into? We learned that the material usage variance can be divided into material mix and material yield. Material mix basically is when you change the mix of ingredients. How will your cost change? Now, in general, when you put in more of the expensive ingredients, the cost is likely to rise. When you put in more of the less expensive ingredients, the cost is likely to fall, right? And what is yield variance? Yield variance is basically when it compares the inputs of material to the output. The output that you got, was it with the required input? Or with the required input, did you get more output than planned or less output than planned? Okay. So the mix variance, how do you calculate? It's the difference between the mixers. So actual quantity and the actual mix is what you enter first. Then that actual quantity that you have there, you see, okay, if this was entered in the standard mix, then what should have been the division? You take the difference, multiply by the standard cost, and then calculate the variance. Yield variance, it's the difference between the actual quantity and the standard quantity. Can you see that? Mix is the standard mix we are using. Can you see that? Standard mix for both. Take the difference, multiply by the standard cost, and you get the variance. So basically, when your actual quantity changed from the standard quantity, right? The input quantity, when it changed, right? How was the yield affected? How was the output affected? Then you have the sales mix and yield. This is basically when you sell products, like let's say multiple products. And if you're changing the mix of sales, how will profit be affected? Right? So the sales mix is actual quantity you're using, but first the actual mix and then the standard mix. Can you see that? Look carefully. One is the actual mix, one is the standard mix. Difference, if it's marginal costing, we use contribution. If it is absorption costing, we use actual profit to find the variance. Sales quantity or yield variance, basically when the quantities we sold changed, the actual quantities and the budgeted quantities, when it changed, how was profit affected? So you can see the standard quantity in the standard mix, meaning the budget, how much you wanted to sell. You compare it to the actual total quantity if it was divided in the standard mix. So only difference is the quantity sold. Can you see that? When that changed, the quantity sold changed, how did your profits change? Then furthermore, variances can be divided into planning and operational variances. What are planning variances? Variances that occur due to planning factors or factors that are not in your control. Operational variances are variances that occur because of things that you could have controlled. So basically, we have a plan, a revised plan based on the new conditions. Difference between planned and revised planned is the planning variance. The revised plan is what we can achieve now in the current conditions. The difference between the revised plan and the actual is the operational variances, what you could have controlled. So for every variance, you can see they have divided. The sales variance can be divided into market volume and market share. Market volume or the size variance is the planning variance. That's when the market share changed or the market size changed outside. No, when the market size changed outside, when the market contracted or expanded. So you take the revised sales minus the budget, the difference between revised and budget into the standard margin. The market share is how did your company manage? How did your market share increase or not? Something you controlled. So that's the difference between the actual sales and the revised sales. Got it? So similarly, even the material variances, price can be divided into operational and planning. Usage can be divided into operational and planning. Right? Labor also revised hours. You have the actual hours and you have the standard hours. Difference between revised and actual is operational. Difference between standard and revised is planning. You all know, right? Labor rate, that's a revised rate, actual rate, and the standard rate. Idle time is always negative. It's basically the hours worked and the hours paid. Especially if you have paid for hours not worked, there'll be idle time. So when you use planning and operational variance, the advantages are that it will highlight aspects of or the variances which you could have controlled and which you could have not controlled. Therefore, the managers are not held responsible for things they couldn't control. And you have a proper idea as to how well your company performed in relation to the conditions in the market. So we can analyze our situation better and analyze our performance better as well. Managers' acceptance of the use of variance for performance measurement and their motivation is likely to increase if they know they will not be held responsible for poor planning. If you are not holding them responsible for poor planning, they know that, okay, we are not just going to be blamed, right? The planning and standard setting process should improve. Standards should be more accurate, relevant, and appropriate. Operational variances will provide a fairer reflection of actual performance. Limitations of planning and operational variances. What should a standard be? Like setting the standard might be a difficult thing to do first. And also it might become now because you're dividing into planning and operational, managers might try to push everything towards planning variances. They will try to hide their bad performance by pushing it into a planning variance. They might try to blame everything on as being as planning. Revising and analyzing variance into planning and operational will take time and it can be costly as well. Do managers use correctly this meaningful information? How can it improve their performance? Just calculating the variance is not a thing, right? Getting meaning out of it and understanding it is what matters, right? And taking corrective action on them is what matters, end of the day. Revise an original budget. So generally, you should not always allow staff to revise the budget. There are situations where you should allow them to revise. Let's say conditions have actually changed and there's a big change, right? Significant change. At that point, you allow revisions. But if there's like minute changes and if the cost of revising is greater than the benefit, then we should not allow for the revision. You disallow. Not beyond. It's when do you allow them to revise the budget? You know, if you always allow them to revise the budget, they will always go and revise the budget. Can you understand? So we should only allow them to revise the budget in situations where we feel like a budget revision is needed. So when budgets are prepared, it's important to make sure that there is goal congruence, that, you know, the entire company is working in the same direction, right? And it's important to avoid the dysfunctional behavior like budgetary slack, right? Or dysfunctional behavior, meaning when one department is doing one thing, company wants another thing, everyone's moving in different directions. That's called dysfunctional behavior. So we try to avoid that at all points, right? And also you should try and avoid budgetary slack. That means like purposely overestimating the expenses. Budgeting can also lead to staff motivation. That's mainly when the staff are involved in the budgeting process. And also if the budget is achievable, budgets should not be too difficult, nor should it be too easy. Right? If it's too difficult, it will demotivate. Even if it's too easy, it won't even like you won't want to put extra effort. Right? So standards also, there are different kind of standards. Ideal, that's when under perfect conditions. Current, like currently what you're doing. Attainable, something that you can attain. Right? So you try to get employees to participate in the budgeting process in order to make them more motivated, but it will take time. There are drawbacks. Just-in-time approaches. Just-in-time is a approach where you're trying to reduce costs, right? But at the same time, it also tries to continuously reduce wastage, like it's a Japanese system. What is TQM? It's also a continuous improvement system, Japanese system, where we are continuously trying to make small improvements, right? So in a JIT and a TQM environment, we will see high levels of automation, high levels of overheads, customized products produced in small batches. There'll be low stock, they won't keep stock, and they emphasize mostly on what? Quality. Just incorporated that as well.
What time did you do last time?
5. Last week, what time did I finish?
3.5.
I did it 5:15 or no. I did not mark it properly. I put it as 5. I think I finished that 5:15-ish. Remember? I can't remember last week. Last week, what was the day? I deleted my Uber app, so I can't see what time I left. I otherwise check my Uber. Last week,
Today is 19, right? 12. I think I'm going.
what time? Today I'm planning to finish by 5. So let's say questions on variances. I'm just planning to do one question from advance and one question from planning operation. Let me take that one.
Actually, does a good job in marking section.
Who?
Taking.
They marked your section C.
They give the kind recommendation part, like where like in that question.
So you are able to improve
Keep
your
notes
answers.
of it and then later onwards, like closer to the exam, you can look into those.
But sometimes are they giving you like very big questions to work on?
No, I mean, it's in the question, it's in the case studies.
Okay. So the marks, you feel like the answers are not too long.
I answer.
ChatGPT's answers.
They don't give an answer.
Or they just tell you how to improve your
They just
answer.
predict a mark. It's where like
You're lacking.
the marking scheme wanted me to
Answer, but you have not
until
answered.
I had not.
Milbao Co. makes and sells 3 types of electronic games for which the following budget, standard information, and actual information is available for a 4-week period.
I think it's
5:30. So I have put lesser time.
as far as I remember.
Yeah, even I remember last week I finished a little late.
It's, there was in Nehimala Junction, it was 5:50. That's right.
Yeah, when I reached home late last week. It was raining also, no?
Yeah.
I don't know. This is. Oh, this is not last week. This is last week.
19 today.
First class, I finished at 5 or 5:30.
That also 20.
That also 5:30.
I think it was 5:30.
No, it's first class. We went that far, right?
Yeah,
And
so
then
did I finish
you
it?
missed the section to additive, and then I went to catch a train.
That was last week.
No,
Week
week before also like
That was
that.
that.
That was what time?
That almost became 6, right? Remember?
I think 5:30. That's why you went to catch.
It was exactly.
Five.
5%, 5 I left at 5 and you also left at 5.
Then okay.
Because you know,
One
reached
minute.
me and then you got me and then you left.
Yeah,
And
yeah.
last week I was alone in the class.
Yes, she was there. You went after you went also, I was going with you. I had to mark the time properly. Okay.
The day we went, 6. Stay there.
Yeah, it's there on this, no? 540. Basic variance is yield. We're going to 540.
Budget.
Okay, budgeted fixed costs are 2.5 million for the 4-week period. Budgeted fixed costs should be charged to product units at an overall budgeted average cost per unit where it is relevant to do so. Calculate the sales volume variance for each model and in total for the 4-week period where contribution and net profit is used as a variance valuation base. Oh, first one to use contribution as the base. How do you calculate sales volume variance? Not sales quantity, sales volume variance. What's the formula for sales volume variance? Sales volume variance. They're asking to first use contribution as the base.
Actual minus budgeted into budgeted.
Actual quantity minus standard quantity and standard quantity.
Do we have to write the equation?
No, I'm just writing it first. Into standard contribution first because they're asking to first use it, do it using contribution. Okay. So it's 3 products now, so I have to like do it in a table.
Why are there so many students for tax class?
That tax is a full-time tax class. That full-time PM class is also coming. It was supposed to be in Jan and then they changed it to April. Yeah, it'll be a full-time PM class, like every day. we'll have
There aren't many full-time.
PM, no. Now full-time tax is going. That same batch will do full-time PM in April.
Full-time means like weekdays.
Weekdays, it'll be just one month. Every day they will have that month.
1 month.
1 month, every day they will have.
Weekday.
Monday, Tuesday, Wednesday, like for 5 weeks we will have. Monday, Tuesday, Wednesday. Now my schedule is coming according to my roster in April, after Ramzan.
Preparing for you.
Preparing for June exams. Because I'm not taking January intake. So I'll be taking that April full month, but I will have a set of students going for June exams. That batch has 55 students, Zian told me. That same batch did another subject, then they did tax. I think they did FR first, then they did tax. Now they will be transferred to me after this for June session for PM. It might be, no, because they come every day, right? So, and actually students in those classes are also like very interested. You're all also interested, not that I'm saying you are not, but they're in that mindset, no, we have to get it done. So
I mean, the other 3 have to complete it as.
you have to come daily then. 1 month it's over. But there's a roster for it. It doesn't now this that you go, it's a 1 year program. Or I think for the skills level, it will be 2-year program. So PM will come only in, let's say, for a year once.
Once a year.
Yeah, that will be once a year only, that full-time batch. I'm not taking January intake this time. Now am I taking April intake? I don't know if I'll have to take April intake, but I'm taking April the full-time batch for June. Standard quantity, then you take the difference, you multiply by
That's why there's a lot of people taking for tax exam.
yes, that's because of the standard quantity actually. Quantity difference you multiply by the standard contribution. But for PM very less. But when I take that batch, I'll have a lot of students sitting. It's good for us to have a lot of students sitting. Because we can look at a higher pass rate, no? But it's fine. Even with the students, 10 students sit, a pass rate is good that they'll just see on the 10 how many pass. How do you calculate contribution? Selling price minus the variable cost. 60.
If they are producing 4 passes, then it's like they get the higher certification.
Yeah, they get a high certification. We have to maintain that pass rate for about 1 year or two years. Then only they give you that certification. For 2 years continuously, you should beat the standard. Then only we will now be having gold now. To get platinum only before this Mercury had. long time before. If you want to get platinum for the next 2 years, continuously, we should meet the standards. Then we get it. That we need to have for every class or every session, we need to have at least, now let's say we are taking 8 subjects. In at least 4 subjects, our pass rate should be higher than global pass rates.
That's easy, right?
It's not that easy to achieve. Especially when they sit for APMN. APMN pass rates are very low. All right. So skills level is good. Actually, PM, it's been good always. I think out of last few sessions for PM, whatever I have been taking, every session we have met, but one session we didn't meet. You know what that session was? When I was in India. Because I had to go to India for the Bangalore session. I think that session we missed.
Somebody else to go.
No, I only did it. But 1 month we were there. So we realized that doesn't work. That's why we have like
So,
now.
30 classes there.
Now we don't know that was initially when we started off with the Indian lectures. Now we make sure that it doesn't conflict. It doesn't affect here. Because that session, it got not only mine, another subject also got affected in that session.
So 80 classes from there.
That was difficult, meaning students like lost that last month, no? And that was the last month before exam. Oh, and that batch was a big batch also. And there were a lot of students in that batch.
So then if you miss it for one time,
We go back again to square one. Can you understand? So now it's not easy at all to get that. Okay. Hopefully that's been the plan for the last few sessions. Yeah, we're also making like trying to, that's why we're having all these revision sessions, finishing syllabus before 1 month. All of it is with the intention of increasing pass rates. Variance.
like my opinion, like most of the bioinstitutions are like money guaranteed.
For us, I don't think, but they obviously want to make returns. But then in order to make long-term returns, we also have to maintain proper standards. No, what happens otherwise? Most institutions who only were behind returns, then
Yeah, true. That is true. And
it doesn't work.
It's like they prioritize the students for all this kind of services for free and stuff like that. So it's like
How much now for so long? Because you know what happens, those packages that we are giving, that were supposed to be monetary packages, the ones you are getting for free of charge, that 7 recording one, high investment for that, because we got guys to record the back end stuff, continuously working on that, high investment, but we have been giving that for free for so long. Even the lecturers, we need to get a percentage of that. Even the lecturers are not taking it. So we are also like coordinating with them on certain things, like meaning we are also not taking it. For so long it's been given for free. So hopefully one day we'll make money out of it. So now we are not. Maybe one day.
People ask me whether like where to study ACCA. I don't recommend.
For ACCA, I feel this is for now. I honestly will tell anyone who asks me this. Because you know, you get a good package, right? Because I'm not saying because I am lecturing here, but I feel it's good for students. They get recordings, they get extra revision, syllabus is done on time, everything is looked into. So
yeah, it's like my kids who
class sizes are not too big.
she's too smart, like so smart. She's like whatever she does, she takes record notes. Oh, I'm like I recommend her to keep it.
They're doing well.
And also they support the students in all the ways they can.
And also the plans are put in such a way, no, it's not when we initially started,
Like now, I understand.
and it's actually very difficult to coordinate it. You know, we need more lecturers for a subject. We can't do it one. When I was doing it alone, it was so difficult for me because it's not possible, right? Let's say I was doing PM all by myself at one point. 2 years now, last 1 year Rukmansa is doing, and we have so many sirs for PM. But 4 now we have, because you need to have that. They're sending to India also, and I cannot go to India. That I said I can't do that. I went one session, but after that, it was very difficult for me. I IIT meaning? There's another ACCA called IIT.
They take like
Okay.
thousands of students. First day.
That is for ACC. Actually, Mercury also did it like that. Mercury also, we had a lot of students. Student numbers were. I studied in Mercury. We all studied. We all are from Mercury. I think most of all the lecturers here are somehow connected to Mercury. They probably studied at Mercury or they worked at Mercury.
It's platinum school and PPIM and everyone are breakoffs from one level.
Everything is breakoff. Platinum Business School, they have a breakoff from Mercury. The Mercury opened a business school, Mercury Business School. So that they, I think, moved off to Platinum. I remember like that. Their management failed. Yeah. Okay. Right. Okay, standard profit. Now we have to calculate the profit here, guys, because they asked you to calculate the sales volume variance for each model and in total for the 4-week period where contribution and net profit is used as a variance valuation method. So first we use contribution and calculated the variance. How do you use net profit and calculate the variance here now?
Minus the fixed costs.
Budgeted fixed cost for the period. Budgeted fixed cost should be charged to the product units at an overall budgeted average cost per unit. Where it is relevant to do so. We have to find fixed cost per unit. How do you do that? 2.5 million has to be divided by the total budgeted quantity. So what's the budgeted fixed cost per unit? We take 2.5 million. Divided by 800,000. 25. So what is the profit then? From contribution, you minus the fixed cost per unit, correct? That will be your profit. So for everything, you have to keep minusing the fixed cost. What's your total variance here, by the way? I have not calculated that. So when you use contribution, the volume variance was that much. When you use profit, it was 76,000 negative. I think something is wrong from there. I was also speaking, so let's see. Correct. They've calculated for each unit. 360 minus 440, 96 total, that's okay. 210, 240 minus 46 minus. They have not taken the total. They've just taken for each unit and left it. But it's okay. This way, each unit is also there, right? If they ask for every unit, calculate the sales volume variance for each model and in total. So we have taken the totals as well. It's correct. Both are correct. Yeah. But when you use contribution, it was more negative. When you take net profit, that's my problem. How is that possible? When you use contribution, it was minus 100. Shouldn't it be lesser the total there? Or this should be more?
Because weighing is brackets. That way.
Let me double check. The individual figures are right though. But when you use contribution, it was negative 176. How come when you're using profit, it's lesser? Oh, probably. Oh, no. You know why? It's a overall no. Because probably some were too high, some were too low. Can you see that? That's the reason. Anyways, it's correct. Next one, they're asking us, calculate the total sales quantity and sales mix variance formula for the 4-week period using contribution as the valuation basis. Variances for individual models are not required. They just wanted the total. So they want the sales quantity variance. What's the formula for the sales quantity variance? Go to advanced variances. You have your doubts, no? I can look into that also. Sales quantity and mix. So let's do sales mix first. Or we'll do quantity first because they're asking quantity first. They asked for quantity first, right? Sales volume. Oh, they did say we'll do sales mix first. Total sales quantity and mix. Okay, we can do anything. Let's do sales quantity first. What's the sales quantity variance? Not the volume, the quantity variance. What's the formula for it? See whether you all remember. Volume is the total volume units we use. Actual quantity, we don't take mix into consideration. For the quantity variance, we're taking the standard mix. Mix. Yeah, yield variance. So we are taking the mix, right? The standard mix. For the volume variance, we just took the actual quantity, standard quantity. We did not divide it in the mix, no. So here, what do you do? Actual quantity is sold in the standard mix. Then standard quantity is sold in the standard mix. Difference multiplied by the standard contribution. So now, what are the models? Superb. Excellent. Good. Standard quantity in the standard mix is basically the budget. How do you divide the actual quantity? What is the total actual quantity? What's the total actual quantity units? 36,000 plus 42,000 plus 18,000, right? Actual quantity. If this was sold in the standard mix, 96,000 multiplied by 3 divided by what? 10. 96,000 multiplied by 5 divided by 10. 96,000 multiplied by 2 divided by 10. Okay, now take the difference. Multiply by the standard contribution. They told you use contribution, right? So contributions was 60, 55, 48. 60, 55, 48. And then you get the variance. They only wanted the total, but we have to take individually as well to get the total. Because we are only following this format, no? Take the total. So that's your sales quantity variance. How do you do the sales mix variance? Standard, no. Actual, what is it? Actual quantity in the standard mix. Actual quantity in the actual mix. Actual quantity in actual mix meaning the actual units.
I take the other term.
Yeah,
I think that's how we go into the term.
actual quantity.
Yeah, this is not this is not yeah, correct. This is sales, no, this is income. For the material, you take it the other way.
It doesn't really matter.
You have to, because my format is in a way that it automatically comes, no?
I think doesn't matter in the.
Yes, it will, because if it's like this, if you're using logic and doing it won't matter.
Yeah, mine is.
But if you're just doing it in a flow, then it will matter, yes.
Right. Minus by the difference.
If you're using the logic, then yeah, then it won't matter. But if you are doing it using like a format, then go with this. So actual quantity in the actual mix, what did you actually end up selling? 36,000. 6,000 units. Now, if this actual quantity was divided in the standard mix, already we have it right on top, we did it. So we'll just paste it. Take the difference. Multiply by the standard contribution. You get your answer. It's pretty simple, right? Variances are very easy. That's because you have not studied it initially.
Again,
You have to practice, then only you'll know the flow of doing it, right? But there's a very important question in this that I want to do, correct? Which is a little different to what we have learned, right? I think I don't know if I did it in class already, but it was a question that I always want to do in class. What was it, for planning and operational? Quickly do that and then we can stop. That question, yeah, it's a planning and operational question. I hope I picked the right.
When are the exam results?
Wait. Truffle of Nedco green shot. I think it was truffle. Exam results will come about 1 month later. Wait a minute. Let me just quickly check if this is the question that I'm looking for. There was a reconciliation question, No, branch reconciliation.
Going backwards.
Wait a minute. Reconciliation question. I want to particularly look that. This is what we done. School uniform have already done it. Subscription. Can't be great for this one. Did you anyone come across that reconciliation question? Wait, I think it was also, maybe it was in the section A. Very good question. I always do it in during division because it's a different question. It's in section A. There are 7 questions in here. The reconciliation, they will ask you to. Let me quickly look into the. Denzel. This one. Can you see here? The first question. Okay, this is the question. Denzel makes and sells a single product. The company budgeted to make and sell 120,000 units in November. The standard cost of labor for the product was as follows. Labor 1.2 hours at 12 per hour. Actual output for November was 122,000 units. Labor cost for the month were as follows. So the monthly labor cost is given as 58,600 at 12.6. That's the actual one. Prior to the calculation of variances, it has been decided to revise the standard cost retrospectively to take account of the following, which are considered to be outside the control of management. A 3% increase in labor rate to 12 per hour due to negotiations with union that were concluded after the initial standard had been set. So standard rate is 12, revised standard is 13, actual is 12.6. A standard for labor use had anticipated that the company would buy a new machine which would lead to a 10% decrease in labor time instead of buying a new machine. Existing machines had been improved, so a more appropriate standard is considered to be 1.4 hours per unit. So standard hours is 1.25, revised standard is 1.4. Actual how to find? 158,600 hours divided by 22,000. Look at the first question. Prepare a statement reconciling the standard labor cost of actual output based on the original standard with the actual cost. The reconciliation should show the total planning variance and the total operating variance. How will you do that? We have not done it before, right? That's what I said.
You have that.
No, but they're asking prepare a statement reconciling. Let's see what they're asking first. Prepare a statement reconciling the standard labor cost of actual labor. So we have to take the standard labor cost for actual output. That means for the actual units produced according to standard, what should have been. Correct? Then with the actual cost. Then guys, what's happening in between here? There's a revised standard, right? So there's also a revised, we have to also find the revised standard labor cost. Revised labor cost for actual output. Correct? And we have to also take the actual labor cost. Now, when you're reconciling it, they're telling to reconcile it based on planning and operational variances. Okay, first way, what's the standard labor cost of actual output? According to standard, what was the labor cost? The standard cost of labor for the product was 1.25 hours per unit into 12 per hour is your standard labor cost for 1 unit. Actually, how many units did you make? Actually, how many units did you make? Actually, how many units did you make? The actual output for November was 122,000 units. So what is your standard cost for actual output? $1,083,830,000, right? What was the actual cost? What is the revised standard? According to the revision, the revised rate was 13. The revised time was what? How many hours? Revised time is 1.4. They told to take 1.4. So 1.4 hours per unit into 13 per hour. And you're making. So what was your revised cost? They told you while you're reconciling, find out the planning and operational variance as well. Now tell me the difference between standard and revised is what? Difference between standard and revised is what? Planning variance, operational variance.
Planning.
Difference between planning and revised is what? Planning variance. So what's your planning variance here? Planning variance has been what?
222,200,000.
It's a plus. That means costs have gone up. So it's an adverse variance, right? The costs have gone up due to planning reasons. So it's an adverse variance. So do it with logic. Costs have gone up. The standard and revised cost have gone up. So it's an adverse planning variance. Difference between revised and actual is what? Operational variance. With operational, the costs have gone down. Correct. We are now here finding the total planning, all the different kind of planning. Labor, no, this labor rate, total labor planning. That is the labor rate and labor efficiency together. Right. Operational was what? Difference between these two. But operational variance cost has gone down. That means this is what? Favorable. Got it, get it? This is how you do that. Why I particularly pick this question? Because we have not done it anywhere else. Okay. Okay. Then analyze the planning variance into labor usage and labor price. So the labor, this variance is both the usage and price together. No? Then they ask you to divide it into usage and price. Divide it into usage and price. What's the labor usage planning variance? Tell me the formula. Labor usage, that's labor efficiency. What's the labor efficiency planning variance? Planning variance is what, guys? Difference between standard and revised standard. So what do you take for efficiency? Standard hours and revised standard hours. So if the revised hours are greater, it will go into a adverse variance, right? So take the standard hours allowed minus the revised hours into what?
Standard.
Rate. Right? Standard hours, according to standard, it was what? 12.125. Can I just write it as standard hours? Then you have revised standard. Now, according to standard hours, listen carefully, it was 1.25 per unit. So for 122,000 units, how many hours were allowed? According to standard, this many. Right? According to revised standard, 1.4 hours were allowed per unit. So for 122,000 units, how many hours were allowed? Right? So according to the standard, we wanted to take this many hours to make the actual units. We have to take the standard hours for actual units, no? But according to the revision, we have to now take a little longer because definitely they are taking some amount of hours longer. Standard rate was 12. So what's your labor efficiency planning variance? What's the labor rate planning variance? Standard rate minus the revised labor rate into what? Actual hours. Into what? Actual hours. Standard rate was 12. Revised rate was 14. Oh, 13, yeah. Actual hours was 158,000. It's 2,600. Now see, we have these two, but if we add these two together, we will get our total planning variance, which we already found on top. You can double check your answer. Oh no, it's different.
Should we take the revised hours?
No, actually, no. That's okay. Correct, no? Planning usage. Don't look at their formula, it's confusing. This is wrong. Oh, revised rate. Okay, wait, this was revised rate per unit, no? The revised rate was not rate per hour, it was rate per unit. No, it was rate per hour. 12 per hour, 13 per hour. What have they done? Actual was okay. They have taken the revised hours, right? I don't understand why they have used the reverse. They have used 170,800 hours. The sum of the planning and the total.
Yeah, that's fine.
But the formula we have to take actual, right?
Because it's planning, right?
Wait, let me look at the formula. No, but we have to go by the formula. Labor rate planning,
So I was paid.
actual hours paid. No, I think it's a mistake here. You don't take the revised hours there. It's wrong for them to take the revised hours. But the problem is then on top, it doesn't, our answer doesn't balance. They've taken the revised time. They've not taken actual hours. They have taken the actual hours at standard time. That's it.
Revised. Yes.
Shouldn't we be revised for its planning?
Yeah, but our formula, no, we always take the actual hours because labor rate, we are only looking at the difference in labor rate. We are only looking at the difference in labor rate on the actual hours.
Should be in plan-
No. Labor rate planning meaning what? The difference in labor rate for the actual hours because of a change in the rate. So for the actual hours is what we checked. No, what they have done is actual hours is okay. They have taken no answer hours is not balancing. We to balance we have to take we calculated the total altogether.
But if you try using the revised and the. Oh,
You know why? You know why in this case it's like that. In general, we take actual hours. In this case, the planning variance has come only due to differences in what? Standard cost and revised labor cost for actual output. In this case, we have not taken the actual cost. We have found the planning variance by taking the difference between what? Standard labor cost for actual output and revised labor cost for actual output. So in this reconciliation, right? Because of this reconciliation only, other than that, generally this formula you don't change. But in the exam, how will they have marked this? It's a very conflicting situation there because we can't change a formula like that. Analyze the planning variance into labor usage and labor price planning variance.
sorry.
Labor rate, labor price.
In this, if you take a 390, 400, then remove the first variance, it's giving 178.
It's not about getting the answer, it's about the logic. Can you
Yeah.
understand?
Why do some of the increasing markets?
Generally, we have to all questions we use actual hours. Then only in one question, why are we using suddenly the revised hours? You know why? Why the marking scheme has adjusted the second answer? Because this first answer, the first question they asked you was to find the planning and operational variances using the standard labor cost, using the revised labor cost, and using the actual cost. So the planning variance that came there was purely due to what? A difference in this 1.25 and 1.4. Difference in 12 and 13. Can you understand? So now when we go and put 1.3, when you put 12 and 3, this was 12 and 3. 12 and 3. But the hours, this was 1.4 hours, that was 1.25 hours. Can you see that? So when we are taking the actual labor hours, we didn't even use here. To get the planning variance here, did we use actual labor hours at all? We did not use it at all. So now when we go and use that, it's going wrong. But in a general situation, we use what? The actual labor hours, right?
But then it's uncontrollable, right?
No, it's not about being uncontrollable. It's about we are looking at a price variance for the actual hours we paid only. The actual logic is the first variance that I'm talking about is the right one. But in this situation, we have to use the revised hours, otherwise our answer will not tally. Why? Because in order to get this 390,400, we did not use actual hours anywhere. Can you see that? So in this particular situation, if the question only comes like this, then we have to use this revised hours. We don't use the actual hours. Why? Because this 390,400, if we want to tally with that, If we use the actual hours, it won't tally. But in any other situation, we have to use always the actual hours. Because that's the correct way of doing it. In this way, in order to tally to this, they've asked to analyze the planning, the previous above one. It's a continuation of that. So when it's a continuation of a previous question, we have to do it like this. You're not getting it at all. You got it right. Look at this. How did they calculate this? How do you think they calculated this planning variance? When calculating this planning variance, at any point, look at the answer. Don't look at my face. Look at the. Look here.
I'm confused.
No, you look at the board. You're confused because you know.
No, I was looking.
Yeah, look at that. I think I have to take it again.
No,
Okay. So look at the board. Right now, see when they got this 390,400, they asked us in this question to do it that way. They told us to start with the standard labor cost of actual output, and they asked us to reconcile. So due to which we found the revised labor and we found the actual cost. Correct? The difference that we got here, the difference between standard and revised, we agreed was the planning variance, or the differences due to planning. The difference that we found here, at any point, did we use the actual time? We used the standard time and we used the revised time. Can you see that? So it was found without taking the actual time. So when you go and use the actual hours here, the answer will not reconcile, or it will not match with this answer. They ask you the breakdown of this. So when they ask you the breakdown of this, we have to use the revised hours.
Another one for operational variance in labor price.
I am telling you what my advice is, if this comes as a continuation question similar to this, you use the revised hours. Okay. If not, always use the actual hours.
Yes.
Only in a situation like this, you compromise.
Yeah.
No, but because they are telling to analyze that previous planning variance, no, into the two parts. So we have to get that answer. If we use actual hours here, will we get that answer? We won't. Can you see that? It will not tally.
Yeah, they have to split the planning.
Split it. Can you see that? They asked me also to divide that one above. So if it's a continuation, can you understand? Only at that point, please change this formula. If not, please use the general formula given to you. That's the actual hours. That's the right one. Right? This also may be right in this situation. Okay. Based on the revised hours. What was your planning variance? That's what we are looking at. Purely based on the budget and the revision. Okay, then the theory questions. Principles of revising a standard and okay, that one. I'm not doing that. I just wanted to do only this part. Okay. So with that, we'll stop.